I'm Debbie Bell-Hosking for FinextraTV here at EBAday 2025 in Paris. And I'm joined by Simon McConnell, Global Head, European Clearing, Citi Bank. And we're talking about the future of clearing. Simon, welcome here to our studio at EBAday.
Thank you very much. It's great to be here.
And of course, you know it's 20 years of EBAday.
Yeah.
We are in Paris, I don't need to tell you that. But this leads to my question in that, what is the future for clearing in Europe?
It's an interesting time to be in the clearing business. We're midway through effectively a change in terms of how we communicate. The clearing systems have gone through the ISO migration over the last couple of years, updating their infrastructures. And SWIFT is nearing the end of their journey in terms of financial messaging, in terms of ISO 20022 going live with the CBPR Plus at the end of this year. What does that give us? It gives us a great foundation in terms of innovation going into the future. There is a lot of discussion now around, well, how do we become more efficient? How do we deliver on the G20 objectives and targets of being cheaper, faster, and more transparent in terms of those flows? We've done a huge amount of work over the last couple of years to get here. GPI in the SWIFT space, all of the work that the FMIs have done, and the work that they are now doing through their day two scenarios in terms of introducing the likes of purpose codes, LEIs, structured addresses towards the end of this year. But it's all increasing the amount that banks need to spend on this business. And what we're having to do is look at where we can maximise our compliance spends to try and create value for our clients. One of the great examples that we have at the moment is I chair the EBA's cross-border working group. And we've been looking at, well, what can we do? There's a plethora of ideas out there in terms of how we improve as an industry. But that's part of the problem. There's a plethora of ideas. What we need to try and do is whittle those plethora down to a couple of real scenarios that we as banks and payment service providers can bet on. This whole, and you'll hear some discussion around the conference today around the call that some of the banks in the working group have made to action to make themselves reachable via the OCT instant scheme, which is essentially the SEPA instant scheme being opened up for international flows, to allow banks to do just that, to become better, faster, cheaper, and more transparent. I think we stand on a precipice. It's for us as banks to move, and I think we as banks probably want to be seen as leaders across the globe in delivering the G20 objectives and targets. So I think that's a really ambitious stand for us. It's a really ambitious stand for the group, and hopefully we'll see the benefit of that in the very near future.
It's interesting how you say you're standing on a precipice, and there's a lot to be done, and part of that is regulation.
Yeah.
What impact would you say that regulatory announcements and thereby developments have had on clearing operations?
I think over the last number of years, the last decade, 2 decades, the amount of regulation that we've seen, particularly in the European space, has just continuously gone up. And with that drives the costs in terms of delivering the clearing operations. What we've discussed there around the OCT scheme is how do banks, leverage their compliance spend to try and create a value-adding proposition. But if you look also in terms of what's coming out, so you look in the Europe-UK space, operation resiliency is a big topic. Incident reporting is a big topic. Instant payment, the new instant payment legislation, banks are grappling with how they deal with that. PSD3 is coming. Now, we saw this morning that it might be another 18 to 24 months that it comes, but these will all bring additional costs that we need to factor into our models. The biggest thing for me as in high value clearing has been operation resiliency. Over the last 5 years, we've spent a huge amount of money in terms of determining, what our impact tolerance is, determining what our critical payments are, and implementing measures to try and ensure that we could make our most critical payments in the event of us having a contingency. We have a lot of work still to do as an industry because we haven't got beyond, I want to prioritise my maximum payment, my largest payments first, right? We haven't got down to the nuance of, well, if I'm talking to the bonds team, these are the payments they need to make. If I'm talking to the FX these are the payments I need to make. And it's showing that our payments, particularly in the high value space, have worked the same way for 30, 35 years. And it's going to take an awful lot of unpicking and working together, and not just the payment professionals in the bank, it's the payment professionals working with the specialists from the other teams to try and work through, okay, you have a dependency on me, how do we work together to get this through? And I think that we'll have to do that at industry, it's not just within a bank.
And that working together is almost like somebody described to me earlier today, that sort of horizontal view, rather than working in silos.
And it's trying to create that horizontal view, because I think what we see is people say, well, the payments team will tell me this, or what we'll see is the operations team will tell me this, or the product team will tell me this. But I think it's recognizing that we don't necessarily all know this, and asking the stupid question is not necessarily a stupid question.
Yeah, absolutely, and I think that goes for many things, not just clearing. If we can talk about fraud now, how significant is fraud for clearing houses, particularly in this current landscape that you're describing?
So I think fraud to clearing houses, it's not a massive thing for the clearinghouse. It's a massive thing for the banks and the customers on the other end of it, particularly as the world gets quicker and quicker and quicker. I've had reason to look at this in the UK with the whole APP fraud, the introduction of the rules around chaps in the last year. So I've had an insight to that, and I'm seeing the kind of activity that we're seeing in that space. What is becoming increasingly clear is, despite the measures that we as banks and as industry are putting in, so the likes of VOP and COP, the fraud is still happening, right? And because these bad actors are very, very sophisticated, they are very, very coercive, and they are, or maybe not coercive is the right word, but maybe, what's the best way of putting it? They're very persuasive, right? So you'll see clients, particularly consumers, who get put up against a VOP check, and they're being coaxed on the phone to say, ignore that, don't worry about it, and make the payment anyway. So we have to continue to educate, right, but also up our own game in terms of fraud detection and protection.
All right, well, thank you, Simon. Sorry, I'm just absorbing everything you're saying, because there's a lot to take on board, isn't there? Well, thank you so much for joining us here in this EBAday studio.
Thank you for having me.